The venture capital VC sector stands out as an opportunity for clean tech. Traditionally, Europe has been a hub for climate-sensitive investments, but the US is now emerging as a key player. The US clean energy sector, backed by policies like the 2020 Inflation Reduction Act, IRA, is attracting record levels of VC funding. This influx of capital forces investors to assess the opportunities and risks of this market. In 2023, Europe's venture capital funding declined due to various factors, including political instability and economic upheaval. As a result, investors began reassessing their strategies. Rajat Khare, founder and CEO of Boundary Holding, a Luxembourg-based VC firm specializing in deep tech startups, observed this trend. According to Khare, Europe's investment strategy is now rivaled by the growing opportunities in the US clean tech sector. The US leads in capital inflows. However, the rise of US clean tech investments has its challenges. The worldwide clean tech market is highly competitive and accounts for less than 50% of the global deal count. This gap is widening as international markets, particularly in Europe and Asia, make advances in green technologies. Investors must also contend with geopolitical risks, economic fluctuations, and the US's complex clean energy regulations. Rising interest rates, trade tensions, and supply chain disruptions complicate investments. Additionally, clean tech startups face challenges scaling their innovations. Many early-stage companies lack the capital to bring their products to the market. Despite these obstacles, the long-term growth potential of clean energy remains attractive to seasoned investors. The U.S. clean energy sector has proven resilient in the face of adversity. During the COVID-19 pandemic and geopolitical instability, U.S. clean energy investments grew. The IRA's funding provisions accelerated this growth. The legislation offered tax incentives and grants to projects promising to reduce carbon emissions and improve energy efficiency. This policy spiked the production of renewable energy technologies. For instance, the electric vehicle market has seen advancements in battery storage technologies, reducing the overall cost of EVs while extending their range. Simultaneously, green hydrogen projects gained traction as a viable alternative to traditional fossil fuels. The clean tech sector is set for greater growth with the race to achieve net zero carbon goals. However, Khare emphasizes taking a strategic approach to clean tech investments. He cautions against overexuberance and encourages investors to stay informed of market dynamics. While the US offers ample opportunities, the global nature of the clean tech sector requires an understanding of domestic and international markets. The rise of clean tech as a dominant force in US venture capital markets is a major shift in the investment sector. Clean energy projects attract unprecedented funding due to policy support driven by the urgency of climate change. However, investors must consider the risks and rewards associated with this growing sector. As the U.S. continues to lead clean tech investments, the future holds vast potential for innovation, sustainability, and financial returns.